you Mastercard stock, just type it in Google, and you'll get this information, Mastercard Inc. So let me briefly explain you. MA is the stock symbol for Nasdaq, and if I buy the right stock right now, I have to pay 272.77 US dollars for one stock. And for 1st August, you can see the timing and everything. And the market cap is in billions, which means it's a big size firm, and it pays dividend of 0.48%. Now, I just want to point out that companies that pay dividend, that means they're financially very strong. Now, you might be wondering that the dividend is even less than 1%. That's a very low dividend. But still, that is important because that is extra money of the firm, that percentage. After paying its creditors, loans, liabilities, it still has money left. That extra money it pays to shareholders as dividend. So even if the dividend yield is very, very small percentage, but that's a positive sign because that's extra money of the firm, that's they are financially strong. Now I want to see when was this formed. I can see from Wikipedia, I can see the box here, and I could see founded in 1966, 53 years ago. Okay, now I want to see what the employees think about it. I'll just copy this exactly from Google, and I will copy this, sorry, and I'll paste it here. I'll type in Indeed and reviews, and I want to see the reviews in for employees. What employees have to say about this firm. It's 524 reviews and it's 4.1 star, which is brilliant because it's brilliant, and you can just go through the jobs, the questions, the photos of the firm and everything, and also you can have a look at the reviews, the pros and cons, read through it yourself, what people have to say about it, and to get better insight. Now let's check the reviews in Glassdoor and see what people have to say about it. And I'll just click here and I'll show you. We have 1800 reviews, and it's we have 4 stars, which is brilliant because there's a lot of reviews and still it's 4 star, and you can just go through the pros and cons yourself and everything, and you can see the jobs they have listed, the salaries they're giving, the interviews happening, the benefits they're paying, the photos there inside the firm. Now let me look at just here patents. It's a patent firm, like it tells me if this firm has any patent. I will just search in the search bar, and I just want to point out that please don't consider it an inventor because these are people who invented but they don't have full rights. I want to look at applicant or assignee because these are people who have full rights of the patents. So in 2012 it has patent, 2007, 2011, 12, 10, and so on. I want to, the more patents it has, the more stronger the firm is, the more harder it is to beat it, and so it is very strong in market, which is brilliant news. And but what I'm more interested in is that do they have any recent patents in 2015, 16, 17, 18, 19, because that mean are they still innovating? That's the question to ask. So just go through the list yourself. It's a big list, I guess, and which is brilliant because they have a lot of patents. And here 2016 they have a patent, okay, and so which is a recent patent. So go through the list yourself. It's a big list, so have a look. Now I want to see the Yahoo, I want to go to Yahoo Finance and see their key executives and their salaries. Click here and just one sec, and just paste it here. And now don't be scared by looking at there's a lot which one to click with so many symbols. What you do is just paste it here in Google, and then you can see MA is the Nasdaq one. That's the symbol I'm looking for. So just click that MA and go to profile, and then you can see the sector, the industry, and the employees. And the brilliant part is we have 5 key executives and all of their salaries have been shown. That is brilliant because it's very transparent. It hasn't hidden anything from us in terms of salaries, so we can see all the salaries. It builds trust. This is brilliant. Now I want to go to macro trend and see some ratios and see how this firm performs. Let's look at price ratio and price book ratio, and I will type in the symbol MA for Mastercard. Click there, and I want to show you that if the price ratio is less than 1, that means that the stock is undervalued. It's a bargain, it's a sale, you must buy it that time because you're getting it very cheap if it's less than 1. If it's more than one, that means stock is expensive. The higher the number goes, the more expensive it gets. Right now, the situation is that it is 53 times more expensive. Somebody who buys in July 2019, they'll be paying 53 times more money. So it's 53 times more expensive. But somebody who bought in 2018 December, they bought it 35 times more expensive. If you just go up and have a look, people paid in 2018 December, they paid $188 to buy something that was only $5 worth. So for $5 worth, they paid 188. It's 35 times more expensive. But right now, it's 53 times more expensive. It's the most expensive since we have data. Since 2006, now it's the most expensive stock in terms of price book ratio. So I can see that in 2006 it's 2.89, which means it was nearly 3 times expensive. So people who bought that time in 2006 June, they paid $4.53 to buy something that was $1.57 worth. It was expensive, but right now it's a lot more expensive. So you need to be careful when you're buying it. You might wait for a year or two for price book ratio to come down. It's up to you to decide. Now let's go to other ratios and current ratio. Current ratio will tell me if the stock is risky or not. So if it's less than 1, that means stock is very risky. Liabilities are more than assets, stock is very risky. If it's 1.5 or more than that, that means stock is very safe, it has a margin of safety, and it's brilliant. Right now it's near 1.5. It's a little bit less than 1.5, so it's okay. And let's look at the previous one. So I can see that it is so approximately from 2005 up till now, it's always been above 1.5, except for one or twice. So that's, I can ignore that, that's fine. And right now it's a little bit less than, so it's fine. So I think overall I would say it's 1.5 or more than that. So it means it's a safe stock overall. Let's look at debt equity ratio. I'm looking at 0.5 or less than that. This ratio will tell me if the company is mainly operating on long-term debt or shareholders' equity. So my ratio would be 0.5 or less than that for it to be ideal. And right now it's 1.55. It's not 0.5 or less than that, which means the stock is very risky. And if you just see up, you can see that the debt is more than equity, which is very dangerous. So, and previously as well, it's very dangerous in March, and 2018 is dangerous as well, and 2017 is dangerous as well. So let me see if it has ever been. Yes, so I can see that since 2005 up till 2015 September, it's a safe stock because it has always been below 0.5. That's brilliant. But since 2015 December up till now, it has been a very risky stock because it has always been above 0.5 in terms of debt. Now let's have a look at return on equity. I'm looking for 8% or more for it to be ideal. It is more than 8%. It's brilliant. Let's look at the previous trend and see has it ever been below 8%. And okay, so I can see from 2009 up till now, recent 10 years, it has been always been 8% or more than that, which is brilliant. So that's brilliant.